What you're seeing is just market correction in that the activity has been quite robust. We've been seeing that now we've crossed the 4,600 mark, which is psychological, and we're looking upward to going to 4,700 maybe by close of the year. However, despite the down move from yesterday's index, we see that Safaricom, which is a major component of the NSE index, actually rose today from about from a lows of 445 in the past few weeks and closed at about 485. Safaricom, being a darling of institutional investors, because of its strong fundamentals, is slowly turning around because it appears that they've weathered the price war with Bati because of the way they've positioned themselves in terms of innovation.
All right, let's talk about other companies that have been doing well. You talk about Safaricom nearing these 5 shilling psychological level. What about KPLC, which has also done well today? The 3 components of the restructuring of its balance sheet. Just talk us through what it is that they're going to be doing and why the market is so upbeat about it.
Okay, KPLC is doing a share split, 8-for-1. They're also doing a rights issue, and the government has also they are also redeeming their preference shares and issuing ordinary shares. These factors are actually going to be beneficial to the company in the sense that they're going to raise capital. They're also going to create a price discovery in terms of the price of the share, and also the permanent dividend burden on the company will be erased by the resumption.
All right, still staying on equities, although we're seeing the correction as you referred to in the market, what we did see at the beginning of the week was interest in financials. There seems to be a pullback now in financials with Standard Chartered and Cooperative Bank, for instance, being losers today. Why is that?
Okay, on the financials, actually, because you see the rights issue for Standard Chartered closed, and so there was quite a bit of activity on that counter. So that is just the market recognizing the fact that there is no further gains to be gained on that. The Cooperative Bank has also reduced its last year, but that is just a market shifting to different counters, the industrials and the commercial. So this is just a temporary shift. However, they had to announce their third quarter profits, and we are bound to see maybe closer to that some resumed interest.
Let's talk about the fixed income market, and today we should be getting results about the one-year paper that was launched yesterday. Are there any results? Do we know how it fared?
Okay, yeah, the 364-day T-bill actually recorded some phenomenal, it got some phenomenal uptake in the sense that out of an offer of 7 billion, they received 12 billion. There also an uptick on the rate from 3% to 3.06%. This actually is a calming effect on the market in the sense that the rates seem to have stabilized, and this should result into some resumed activity on the fixed income market.
All right, we're told that within the last few months of the year, we can expect to see more buoyant activity on the bond markets, for instance, many more bonds scheduled. We've been debating whether or not we're going to see about 20 billion shillings raised or 12 billion. But anyway, we're going to see quite a bit of activity. Just tell us about the other bonds to be launched, starting with the National Housing Corporation.
Yeah, there's actually a pipeline, a National Housing Corporation bond. However, this bond is still awaiting approval from Treasury since this is a government parastatal. But once that is cleared, on the back of the housing finance, because they are both in the housing business, we expect some good uptake on that. However, the Nairobi City Council is planning to raise 100 billion on an infrastructure bond. This has whetted investors' appetite, and they are subject to an image building and reorganizing the financials. Right. This is bound to be an interesting issue.
Let's talk about the vibrancy of this market, because that's also been a talking point in itself. We know that banks have shown a lot more liquidity, and we also know that the interest rate regime makes the fixed income market a lot more attractive. But apparently there are jitters when it comes to the secondary market, and this raises questions as to whether or not the government and its various institutions can raise the money that they're looking to do.
Well, actually, in terms of attractiveness of the fixed income, that is not without a doubt. However, the secondary market has not been very vibrant despite the liquidity. But this really is a factor of perception, because on the short end of the yield curve, they seem to be, the market players on that segment seems to feel that the rates on that level have kind of bottomed up. And so there's a bit of activity on the short end. However, on the long end of the yield curve, there's a perception that the yields might tick up slightly. But they still need a calming effect, because some of the takers on that end are looking for higher yields, and that's why there's been a bit of reluctance on people to trade actively on that end. However, the government, through the central bank and the market players, would need to work in tandem to be able to resuscitate that, because as you said rightfully, that segment should be active for the success of the two bonds that are actually in the pipeline.